Welcome back to another episode, family. Afro Senpai here. Today we are responding to a video that Mr. Richard Fain put out talking about why he does not invest in Bitcoin. And before we begin, please understand that I am not here to roast the man. So if you came here just to see some altercation or some beef happening, this is not the channel. I try to keep things as positive as possible, because what you put out into the universe, you get back at you tenfold. So I respect him, I respect his hustle, and I agree with 9 out of the 10 things that he says on his channel. But when it comes to Bitcoin, that is where we differ. And he specifically says at the beginning of his video, this is why he does not invest in Bitcoin. Doesn't mean you don't have to. His plan to growing his wealth is not my plan, and my plan is not your plan. Everybody's plan is different. He's already got his millions. I'm on my way to becoming a millionaire. I'm using Bitcoin, I'm using Tesla as my mechanisms for blow-uptuation. So please, please, please watch the entire video so you understand my perspective. This video is a low-key strategy for my hidden plan or my hidden agenda for him to become a Bitcoin holder. I want him to at least have some exposure to Bitcoin, and hopefully this video helps him understand why he might want to start allocating just a little bit of his money into Bitcoin. And while we may not agree that Bitcoin is the right mechanism for each other, I know we both can agree that investing is a must. One of my life goals is to help my brothers and sisters move into a higher wealth bracket than what we are used to, because we've been left out of the wealth conversation for a long time. And I strongly believe that Bitcoin can help us reach that goal. Let's go. We're going to pick up right after his intro. And so he was just explaining where you could reach him, where you could get his affiliate links and all that. So again, respect him, respect his hustle. He also just explained that this is why he does not invest in Bitcoin, but you certainly can if you want to. All right, so here we go with number 1.
The first reason I don't invest in Bitcoin is because it's brand new. It was created in 2009.
Okay, so like he said, starting in 2009, it was $0. And we can also see what has happened over time with Bitcoin, though. So if I'm looking at average return over real estate, the past 5 years, real estate has offered 8.1 return on investment. Year to date, it's at 29%, which is all great numbers. When we look at what Bitcoin is doing compared to traditional assets, we see year 1, 220%, -1 for gold, 31% for S&P. And then year over year, we see these crazy returns. And then this one over here, I'm looking at 5 years out. Now, this particular website is talking about the percentage values show how Bitcoin investment outperforms other financial assets. And this is a comparison if you had invested in Bitcoin over the S&P 500, over the United States dollar, so on and so forth. And so when you think about the newness, if you will, of Bitcoin, and you go back to when the stock market first originated in the United States, do you feel that people were saying to themselves, you know, the stock market here is pretty new. I'm going to wait 5-10 years before I start investing in these American companies. Even though Bitcoin is relatively new compared to these other traditional assets, we see this track record of what it can do and what it continues to do. So yeah, Bitcoin is new, but that's okay. And I talk about this in a different video called the Diffusion of Innovation Curve. There's a link to that video at the end of this video, so feel free to check that out. People who move first make the most money. And then let's see what he says for number 2.
The second reason I don't invest in Bitcoin or other cryptocurrencies is because there's really no regulation around that particular investment. It's not tied to any country. And, for me, guys, that is a concern.
Being a younger buck, I feel that it not being tied to the SEC is both good and bad if you think about it really. It's good because there is no overarching big brother to control this thing. It's made for the people, by the people, and continues to run based off of the community. Now, it's bad because without regulation, big institutions don't want to touch it. And if big institutions don't want to touch it, then you don't have the big money that comes into it. If you don't have the big money that comes into it yet, then you don't have the price blow up situations that we're looking for. But let's actually look and see what the SEC is supposed to do. So the role of the SEC is threefold. Protect investors. Now, protecting investors is really debatable because of the fact that they established accredited investor status. And that's a whole nother video that we have to talk about. But maintain fair, orderly, and efficient markets. Again, the SEC is allowed to put on circuit breakers when the market isn't doing what it's expected to do. Let's say I'm shorting SPY or shorting VU and the market drops off and they put a circuit breaker on my options. Now I can't sell out of my options and I lose out on a lot of money. Facilitate capital formation. This is a fancy term for saying moving assets from one entity into another. This is 100% Bitcoin's purpose. Moving money from one person to another without the need of a middleman, without the need of a central bank, without the need of Chase Bank, without the need of Wells Fargo. I should be able to send money to whoever I want, whenever I want, for minimal fees. If you're trying to move 25K to a different country back home because you're trying to take care of your family, Western Union is going to mess you up. Another thing that Mr. Fain could do is these big websites that are running Bitcoin businesses, so BlockFi, Nexo, Coinbase. You can call these companies up, you can email these companies and say, hey, how are you guys working with regulations within states? How are you guys working with regulations within countries?
When I'm thinking about investing in the stock market, I can rest assured that if you're a publicly traded company and you're selling your company's stock on the New York Stock Exchange, you're going to be vetted and you're going to be legit. The third reason I don't invest in Bitcoin is because of security issues. So I buy a piece of Bitcoin. I store it in a digital wallet that's in the cloud or on my computer. For me, guys, there's just not enough security. Why? These clouds, they get hacked all the time. And I've read some stories where these clouds have been hacked and people have lost their Bitcoin because of that. Also, think about storing your Bitcoin in a digital wallet on your computer. You got viruses, you got hackers, all kind of stuff.
Okay, so two things. You can store your crypto online or you can store it offline. So let's look at both of those. When you're talking about storing your Bitcoin on a platform, again, I've talked about BlockFi. They are the ones that are holding my crypto and I can transfer out between other wallets that I have. And if you're talking about security, the more prominent platforms are going to have some sort of security mechanism in place. And it just comes down to before you put your money at these particular platforms, you call them up, you get in contact with them, and you say, hey, what are you guys doing to keep my cryptocurrency safe? If you guys go out of business, what would happen to my crypto? I don't store my coins on my computer. My computer could have a virus right now. I could burn my computer right now. I could throw my laptop in the dumpster right now, and I'm still going to have my crypto safe at these companies. Another form of security comes in the form of private keys. Now, if you don't know what a private key is, again, this is not that video for that. 99 Bitcoins has a beautiful website as well as a YouTube channel that explains what private keys are. If you happen to lose the phone that stores all of your Bitcoin, seed phrases are ways to repopulate the coins that you had on a particular platform. Lots of different mechanisms are now in place to restore and assure customers that their stuff is safe and can be accessed almost anywhere. Back in the day, like if this was 2010, 2011, I would totally be on board with what he's saying. It was like the wild, wild west back then, but now things have become a lot more better in terms of crypto security.
And if something happens while your Bitcoin is in that digital wallet on your computer and it gets deleted, you got no way of proving you owned that Bitcoin.
Okay, so again, we talked about seed phrases, we talked about private keys. The other thing I did not mention was having your stuff offline. So if you feel like that particular company is vulnerable to an attack, what you can do is get a hardware wallet. And this video right here is going to explain just what a hardware wallet is and what it does. And these are the two most popular hardware wallets that we have available today. So check this out real quick.
Hey crypto fam, this is Chris from Exodus.io, and today we're going to compare the two most popular hardware wallets on the market, Trezor and Ledger. Both Trezor and Ledger are hardware wallets, which means they're physical devices that hold the public and private keys for your crypto. This means you need the device in your hand in order to send a transaction. This is accomplished by physically verifying the transaction on the device. We call this type of wallet cold storage. It's arguably much safer than keeping your funds on a hot wallet where the private information can be compromised. It's a trade-off here though, ease of use and convenience for better security and peace of mind.
So basically what they're saying is I could buy Bitcoin on Coinbase, I can get a hardware wallet, I can then transfer my Bitcoin or whatever coins that I'm interested in onto my hardware wallet. Now my Bitcoin is safe on the USB drive. I throw that bad boy into my safe. I set it and forget it. Let the price appreciate 10 years from now. And then I go ahead and do what I want with my Bitcoin. Now, I do not do this personally because I allow all my coins to earn interest at places like BlockFi, at places like Nexo.
Especially when I purchase it, where do I keep it? Where do I put it, in this virtual bank?
Exactly. You legit put it in a virtual bank. It's like Ally Bank. Ally Bank has no brick and mortar shop that you can go to, but you can put your money in that bank. Yes? And in turn, Ally offers you better interest rates than whatever brick and mortar you want to insert there. Same thing for these crypto wallets, these crypto platforms that I've told you about. Abra, BlockFi, Nexo, Vault, all of these platforms are my virtual bank.
Who's to say I buy this Bitcoin and tomorrow it's gone? Who do I go to get my Bitcoin? Who do I go to get my money back?
And that is a really great point. But like I said, before you invest any money, just like you're always doing your due diligence when you're selecting a stock, you're going to go to the company and say, what mechanisms are you putting in place to protect me? If you go out of business, how do I get my money back? What do I do? What are the steps that I need to take? The stock market's the same thing. I can put my money into a new company that no one's ever heard of. The stock could drop by 40% one day and then be delisted the next day. As far as real estate goes, you could have a property. The government wants to build a road through that property. They're going to claim eminent domain and take your property, and they don't even have to give you full market value for that property. Anything can be taken. Everything's a risk.
And the fourth and last reason I don't invest in Bitcoin is because of the whole cloak and dagger anonymous thing associated with Bitcoin and other cryptocurrencies. You know, no names of the buyers, no names of the sellers.
A couple of things here. Real estate You could talk to the person, say, hey, how long you've been living here? What are the problems with the house? So on and so forth. You do the deal with them. But in stock, you're not figuring out who is this person who's selling the stock to you. You're either you're typically going through a brokerage account, and they're just saying, hey, we've got stocks for sale. Do you want to buy them? I can get on board with him when he's talking about like who made Bitcoin really. While you may not know who invented Bitcoin, you can always read its white paper, and I believe I'll link that in the description as well. But the white paper tells you why Bitcoin was invented. If you feel like the central bank, if you feel like your government doesn't use their money properly, Bitcoin is where you want to be. Every coin that comes out, every reputable coin that comes out has a white paper. The white paper of the coin explains exactly why the coin is invented and what its purpose is. There are several coins where the authors tell you who they are, and they are interviewed, like Vitalik Buterin, who invented Ethereum. Let's say you don't invest in Bitcoin because of its anonymity. Why not invest in Ethereum? Because it has a lot of use cases, especially for business. If he's doing real estate deals, I bet you 10 years from now, 20 years from now, deeds and titles will be done through smart contracts on the Ethereum chain. A special thanks to Mr. Richard Fain for dropping knowledge about why he does not invest in Bitcoin. Folks, we need to remember, everybody's financial journey is going to be different. Some people will never invest in real estate. Warren Buffett doesn't like real estate. Some people may feel uncomfortable getting into business because they don't like to hurt people's feelings. But Mr. Fain, please invest just $100. Let's do a challenge. I am challenging you right now. Mr. Fain, put $100 into Bitcoin on Coinbase, one of the safer, well-known exchanges for crypto. If you have not doubled your money in 5 years, I will PayPal you $500. Honest truth, I've done episodes where I do donations, I do giveaways and everything. You're either going to get money or you're going to get money. You have some exposure to Bitcoin. Ooh, speaking of exposure to Bitcoin, I wanted to show you one last thing. When we're talking about building wealth, we want to talk about being diversified in different asset classes. That's why he has stocks, he has business, he has real estate. Bitcoin offers another diversification. If I zoom in on this thing, can I get myself out of the way? Oh, I can. If we zoom in, we're looking at what Bitcoin is correlated to, and we see that Bitcoin is not correlated to gold, it's not correlated to commodities, it's not correlated to the market. So if you're looking for wealth and diversification, you want to be in some small part of Bitcoin. I have family who fights me on buying Bitcoin and they say it's a scam. I'm not saying put your life savings into Bitcoin. I'm saying you can put in $5 a month, $5 a week, whatever you're comfortable with. $5 is a Starbucks drink nowadays, and it's going to be more with inflation, which is another reason why you should be in Bitcoin. And if you're not convinced on that, then go back to doing whatever it is you like to do. Again, special thanks to Mr. Fain for making the video. Respect his channel, respect his hustle. Go check him out, go subscribe to his channel. Comment below, do you think Mr. Fain should accept my offer? Let him know in his comment section, and thank you so much for staying to at least the middle part of this video. Thanks for watching that first part. We still got a little bit more to go, but before we finish off this episode, please consider subscribing to the channel. I make videos about building wealth along with a winning mindset because I believe that everybody deserves to be happy and everybody deserves to be free. And with that, you're going to see the final piece of this episode, which is the billionaires who have changed their mind on Bitcoin. And until the next one, remember to smile because you are beautiful. Peace.
See you today.
I hate gold. Gold is a religion. There's some fundamental value to gold, but everything else, it's a collectible. I see gold and Bitcoin as being the same thing.
Well, hate is a strong word.
Okay.
So the miners too, all of gold, the whole gold spectrum.
Individually as people, I've heard they're great people. But As an investment, okay, you're right. Hate is not strong enough. Hate with extreme prejudice as an
Wow.
investment.
Oh gosh. Okay, so Bitcoin and gold on the same level for
They're
you.
both collectibles.
Okay.
The value is based off of supply and demand. And the good news about Bitcoin is there's a finite supply that'll ever be created. Ethereum right now has an advantage over Bitcoin as a store of value and transactional, because as more people get into NFTs, all they're going to know is Ethereum. And they're all going to have to buy Ethereum in order to do it, right?
Let's get one thing straight at the very beginning. Mark Cuban owns Bitcoin. Mark thinks that Bitcoin will go up. He's bullish on Bitcoin. But Mark's even more bullish on the second highest cryptocurrency by market cap, Ethereum.
Most people coming in right now fall into two categories. Store value, I want to make some money, Bitcoin, right? So if you're an investor first, Bitcoin. But everybody else, collectors, why would they buy Bitcoin? Ethereum, even with all that hassle, once you get your arms around it, it's less hassle than going to deal with the bank.
Yeah.
As more people realize that, then you start seeing that rush. And so that's why I got involved. That's why I think Ethereum is going up and up and up and up.
Number, what's going on with this huge rise from $20 way up into the hundreds and then a precipitous fall yesterday?
Well, let's remember that until yesterday, most people around the world never heard of Bitcoin. Bitcoin, for those who don't know it, is basically virtual currency, the same that you'd get for blasting aliens in a video game, except now traded globally. You can buy Bitcoins with virtually any currency on Earth and convert back into any currency or buy goods and services with it. If you're willing to take Bitcoin as a currency, a virtual Barbie currency to me, it has no basis, no central banker, no hard asset behind it. But if you don't trust any other currency, this is where you go. So essentially what's happening here, Heather, people all around the world are saying, I've had it with my central banker. I don't trust politicians anymore. I'm going to trade with this currency with my computer and my cell phone.
Mr. Wonderful thinks it's worthless.
Well,
he called it garbage this morning.
I want to explore the idea. Yeah, I did say that. I want to explore the idea that there's nothing here except raw speculation. No different than when I go to Las Vegas and put my money on black or red on a roulette wheel, because where is the intrinsic value inherent in deploying real capital? Let's talk real money here. And putting it into Bitcoin as a storage of value. I get gold. For 2,000 years, including the Romans, they saw value in owning that as an asset class. Tell me why this, which is basically a digital game, that's the way I look at it, has any intrinsic value.
You and I had some epic showdowns on television. You called it everything from crypto garbage to one time you forbid me from owning any more of it. But I think that there's a lot of changes that have happened in the market, both from a regulatory standpoint and also some of the market dynamics. And you now are comfortable starting to allocate to it. So maybe walk us through kind of what changed and then how you're thinking about allocating to Bitcoin and cryptocurrencies today.
Yeah, so what changed is exactly what you said, Pomp, the regulatory environment. I work in a very regulated world. I'm an investor in so many different financial services companies that are reporting issuers. And so we don't have the luxury of being offside with regulators, not now, not ever. And in 2017, when we were talking about those epic moments, and it's true because I get those things shoved in my face every day, but I point out that when things change, I change. That's when I took my first Bitcoin Ethereum positions in 2017. Obviously, I've done very well with those. But recently, after the regulators in Switzerland, France, Germany, Australia, England, Japan, Canada, all started to change their stance on crypto, it allowed me to start to allocate to it in a compliant way. And that's really what got me going. Obviously, this is an asset class that's here to stay. It's still going through a very nascent phase. I'll be putting a lot more into it as time changes. And still the regulator's not 100% on board. We all know that. But things are getting better, not just domestically, but internationally. And so I'm an international investor. And in many countries where we're talking about Bitcoin or Ethereum or other assets, other crypto assets, tokens and coins, the regulators opened up.
What's the current allocation percentage? I think at one point we talked and you said you were at 3%. Are you still at 3%?
No, I've told everybody, I've disclosed that by the end of the year I'll probably be at 7%. That's the target, because I've gone beyond Ethereum and Bitcoin.